Multiple job postings recently added to LinkedIn by NIO's vice president suggest that the Chinese automaker's expansion into the U.S. could be coming sooner rather than later. NIO began its international expansion in 2021 when it announced plans to build 4 battery swap stations around Oslo, Norway, with 12 more planned in other cities in 2022. The company is reportedly hiring a local team of experts in the United States as the automaker looks to expand its presence outside of China. There are reports that NIO is looking to fill close to 50 positions in the U.S., ranging from software engineers and developers to strategy heads, human resource executives, and financial analysts. The jobs were posted on LinkedIn, so is this confirmation that NIO will soon launch in the U.S.? The news comes a few weeks after the Shanghai-based company said it plans to enter Germany, Netherlands, Denmark, and Sweden in 2022 and reach 25 countries by 2025 at its annual NIO Day event. Some of the specific jobs posted on business-focused social media platform LinkedIn include a motion control expert, principal graphic pipeline software engineer, audio systems architect, head of power strategy, a head of user infrastructure and construction readiness, a safety standards and compliance leadership engineer, among others. Most of the new hires will be used in Silicon Valley and San Jose. Since hiring has just begun, it's difficult to say when entry into the U.S. market would begin, but it does appear imminent. NIO already has a base in the Norwegian region, and the company is set to begin sales in Sweden by the end of 2022. In November, the Chinese luxury electric vehicle maker denied reports that it plans to establish a factory in Europe as part of its expansion plans. The reports had said that NIO was planning a production base in Poland after the company put a job posting in LinkedIn seeking a UE plant operation manager. The company said in a statement that NIO is not planning a manufacturing site in Poland at the moment. Now let's take a trip down memory lane. Despite being founded just 7 years ago, NIO has established itself as one of the leading EV automakers in China and has already begun to expand into other markets overseas. Earlier in 2021, the automaker announced plans to sell its ES8 SUV in Europe, beginning in Norway, followed by its flagship ET7 sedan. By June, it had received approval for mass production of its ES8 for markets throughout Europe, furthering its expectations for expansion. As its proprietary superchargers and battery swap stations were making their trek via Norway, job postings hinted at a new presence in Germany and the Netherlands. Sure enough, by September, the automaker had confirmed entry into Germany next, beginning with the ET7 in 2022. The ET7 will mark NIO's first EV model to be sold in Germany, joining NIO's ES8 SUV. The automaker has shared plans to export the ET7 to Norway in 2022 as well, although German customers will not see the ES8 for sale, or at least not yet. Unique to the NIO sedan, the upcoming EV will come standard with NAD, NIO Autonomous Driving, which will gradually deliver point-to-point autonomous driving in multiple scenarios. NIO confirmed that if there is significant demand for the ET7 throughout Europe, it's open to the possibility of establishing local production facilities and would even consider collaborating with local OEMs via joint production. The ET7 is currently available for pre-order in China and is anticipated to go on sale in the first quarter of 2022. Sales in Germany should soon follow, with the goal of delivering ET7 EVs to customers in Germany by the fourth quarter of 2022. So far, we have no indication of pricing of the ET7 in Germany, although NIO had previously shared the 70 kilowatt-hour version will start at a price of around $69,000. Most recently, the automaker held its annual NIO Day event in China, and in addition to unveiling a second sedan called the ET5, shared intentions to further expand to 25 countries and regions around the globe, including Denmark and Sweden. With its latest job postings, NIO appears to have the U.S. market in its sights as well. Now the question to be answered is, how is NIO performing in the stock market? Investor sentiment has been lackluster due to a lack of new vehicles and supply chain constraints, and most recently, the heightened U.S. delisting risk. We believe these headwinds can all reverse in the coming 12 months, with NIO launching 3 new models over the next 12 months and boosting manufacturing capacity from 120,000 to 600,000. NIO recently released excellent third quarter results on November the 9th, making NIO stock look very undervalued. However, since then, NIO stock has been drifting lower, but this might not last next year. The stock peaked at $43.20 on November the 8th, the day before results came out. But as of December 27th, NIO stock was at $29.96. That's $13.24 lower, representing a drop of more than 30% in just over a month and a half. However, we believe the stock is worth at least one-third more at $39.85 per share. It almost seems as if the market didn't hear the results correctly. Its deliveries for the third quarter were 24,439 electric vehicles, which is up 100.2% year over year. Moreover, the sales were up 102.4% year over year to $1.3 billion. In other words, NIO has been doing extremely well in both sales and deliveries, and on top of that, its gross margin has been climbing. It rose to 20.3% from 18.6% in the second quarter. NIO ended 2020 at $48.74, so it's down $18.78 year to date, or about 38.5%. That doesn't seem appropriate for a company that's going to have 74% higher sales in 2022. This is the main reason we think there's a good chance NIO stock will drift back up. At some point, the market's got to realize it has overdone the sell-off. At this point, it makes sense for value-oriented investors to either average down into their position or take new stake in NIO stock. This is because you never know if the stock is at a trough at this point. Even if it gets cheaper, investors can buy more then. In fact, we've often found that once a stock like this reaches a trough that's undervalued, it doesn't stay there long. As a result, look for NIO stock to rise at least one-third more over the next year. Now is the best time to take advantage of this opportunity. Down about 60% from its all-time high earlier in 2021, it's tough for bulls to acknowledge that this decline has been fair. Even despite their pullback, the company still commands a market cap of roughly $50 billion. It wouldn't be hard to argue that even the current valuation is generous, at least by historical valuations given to the auto industry. The current chart doesn't have a great look to it. However, there's a chance we see a reversal from here. Notice how NIO stock broke below the prior December low of $27.79, dropped to a new low of $27.52, and then reclaimed the prior low of $27.79. Aggressive bulls can trade this reversal for a short-term day trade against the new low near $27.50, or they can look to swing it for a potentially larger move. In the latter case, we want to see the stock hold above $27.79 and continue to push higher from here. Specifically, let's see how it handles the 10-day moving average, and should it get there, the $30 level. Above $30 in the next three levels are pretty straightforward. $31.50, the 21-day moving average, and the gap fill at $32.90. Now on the downside, a break of $27.92 puts the $27.52 low back in play. Below that, and we could see a test of the 10-quarter moving average, which is currently at $25.60, but rising quickly. We believe that NIO will record some great numbers in 2022, now that the company has extensive expansion plans. It's safe to expect that the next expansion news will surround what EVs they will be bringing to its latest list of European countries. Still, it'll be exciting to ponder the prospect of NIO coming to compete with some major EV automakers on United States soil, though at the moment, NIO hasn't officially confirmed launching in the U.S. We'll keep you posted if anything changes. If you enjoyed the video, please like, share, and subscribe. Stay safe, and see you next time.